Is the Canadian economy, and a number of people have been saying recently and over the past year, really, or year to date, the economy, is it in a precarious situation at present? On those who are predicting impending doom for the Canadian economy, the points they will make is they stress and look at the real estate market. Government regulatory changes to mortgages which came in the fourth quarter of 2016, and then again recently have significantly tightened credit and mortgage availability, which could lead to potentially a national housing correction, increased foreclosures, and potentially a recession. This is the argument on that side. And in fact, some will say that this has already started. Home Capital, which is the largest publicly traded quote unquote subprime, we wouldn't say it's exactly subprime, but people put the parallels to what happened and what went on in the US in their credit crisis towards Home Capital as a Canadian quote unquote subprime lender. They recently suffered a run on the bank and will likely prove and they say, as a harbinger for the coming crash in the Canadian market. Of course, we now know that that lender has now been given a huge lifeline, and we talked about that a couple weeks back. Canadian interest rates spiked this past week as the Bank of Canada has taken a more hawkish stance amid a backdrop of apparently coordinated central bank tightening talk. Now, the Toronto housing market, which is a linchpin for the Canadian economy, has apparently finally cracked. The Vancouver housing market, now, it's a tougher situation here. Has it cracked? Condos continue to do quite well, but there are a number of people that fear the recent coalition between the NDP and the Greens in BC bodes poorly for the housing market in this region. So do you see finally a pullback, a significant pullback in that market? There's continued weakness in oil. Should that result in another leg down in the Alberta economy, this would bode poorly for the Canadian economy. In short, the argument is a perfect storm is brewing, that the Canadian housing market and the Canadian economy could be sent into a tailspin. Now, on the other side of the argument, GDP growth over the first part of this year, the first quarter and a half of this year, has been strong relative to other G7 countries. But again, if you have this slowing housing market, slowing energy prices, or even just a status quo in where energy prices are right now, does that growth halt? And then do you see a situation where you see progressing towards negative growth? Aaron, I'd like your thoughts on what I'm talking about here.
Well, I remember a year ago there was a report out that stated it broke the job numbers down in Canada, and essentially nearly all of the job growth that we had seen in the previous year had come from the Toronto and the Vancouver areas. So it doesn't take, if you're from Vancouver, you're from Toronto, you just have to drive down the street. You can see all the cranes in the sky, all the construction activity. I mean, it doesn't take a genius to know what two of the biggest growth industries have been in these regions over the last several years. And when the foreign buyer tax did come into Vancouver, that did impact the market for single family houses. That market has now actually recovered. It's starting to grow again, although sales aren't as high. But what it did not impact was the multifamily market, the condo market, the townhouse market. That market continued to go strong, and that's where we're seeing a lot of the construction is just everywhere you drive around in Vancouver. They're just the entire block slated for demolition, and they're building towers. So there's a lot of jobs being created there, obviously, and then a lot of jobs that just trickle down from that. Supporting the construction industry either directly or through other types of services that people that are employed in that industry purchase, all the way down to restaurants and vehicles and basic services just for living. So it's certainly, when I look at the Canadian economy, and I think you and Ryan, me and you have always said that we have never liked the diversification of the Canadian economy. I mean, it's always been so resource based. over the past decade it's been so real estate based, so it is a very concentrated economy. And I think that when you have a concentrated economy like that, you're always just kind of standing on ice, because if one of those legs break, it can really take down the rest of them with it. That being said, was it the right decision to raise interest rates? Well, really difficult to say. I think that one interest rate increase is not really going to move the needle that much in terms of impacting these industries or really putting people underwater with being able to service their mortgages and their other debts. However, what really matters is how aggressive is the BOC, is the Bank of Canada going to continue to raise rates by. And if I had to be a betting man, I would say that they're going to try and not be too aggressive. It's been 7 years. I think that they like the idea of being able to raise rates a little bit just so they can reduce them if they have to in the future. But they don't have many options right now. So one or two rate raises this year or over the next year is essentially what I would expect, and much more beyond that. And I think that they can really deflate the growth that they believe that they have generated over the past year.
Yeah, I'd agree. 1 to 2 quarter point increases is not is probably in the cards, but it's not. It shouldn't stem or destroy the Canadian real estate market or the housing market. Now, I wouldn't go too aggressive beyond that. Looking at what I see right now in the economy, broadly speaking, because as Aaron said, so much of the job growth has been tied to this segment, and you are in a bit of a precarious situation. And in my opinion, the average Canadian household is over leveraged right now. We did not do as the US has done and deleverage households when the financial crisis hit. And that to me worries. It doesn't keep me up at night, but it worries me slightly about the Canadian economy right now if we were to see an aggressive rate increase from the Bank of Canada. We don't expect that. And more than 1 or 2 increases, really, in my opinion, would be a poor choice at this time.